Hello guys, it's Max here from Daily Market Movements, and in front of me we have the Nasdaq100 futures chart. Now, as you can see in today's trading session, we've had a minor pullback here. We're trading roughly down 1.5%. Yesterday we ended the day down roughly 0.3%, and this is because we've had bond yield rising through the roof in yesterday's trading session, and they've continued to do so in today's session. Now, what does this mean? Yields are rising, so this now makes the bond market more attractive. So you've got all of these hedge funds and pension funds that have had their money invested in the stock market throughout most of 2020, and we've seen some fantastic gains across the board, especially here in the Nasdaq100 and some of the biggest growth stocks like Apple, like Google, like Facebook, like Netflix. And so what hedge funds and pension funds tend to do, they tend to take their profits, so they will trim their positions here in the stock market, and now they will now go and reinvest that money into the bond market. It's a very safe way of trading, especially when you're investing someone's pension funds. So if someone's been saving up their whole entire life and they're in their 50s or their 60s and they're due to finish working in the next 5 to 10 years, hedge funds will definitely bank these profits and go and invest it into the bond market. So that's exactly what has been happening over the past couple of trading sessions. We've seen these yields, so the return on these bonds go a lot higher, which has made it very attractive for the hedge funds and pension funds. So typically you are going to see some pullbacks in the market, and of course we're trading just below an all-time high here in the Nasdaq100, so it's very, very healthy and normal to see traders taking some profits. But that being said, bond yields can only go up so high, especially when we are in a low interest rate environment. So historically speaking, yes, the bond yields can have a small spike towards the upside, but they don't just keep going up and up and up like the stock market does. So we will definitely see investors return back to these massive growth stocks, the like of Apple, the likes of Nvidia, that's down 5% today. You've got the likes of AMD, which is down 5%. Some of the biggest car brands in the world, like Tesla's down roughly 5% today. You have NIO down 5%. Investors will return to these stocks because they are winners, and that is what you have to keep in mind. A lot of the stocks in this industry are winners, so I would definitely be buying the minor dips. If we can get down towards the 50-day EMA, that would be even better, down at 13,200. The 50-day EMA has offered plenty of support in the past year or so trading, so that is definitely a supportive area, but I would be adding small positions to every dip that occurs. 14,000 is my price target. That's the green line that you can see on your screens. It offers a large psychological target, and that's exactly where I believe this market will go. So I am a bull here, no interest in selling the Nasdaq 100. I'm just simply looking to add value by buying the dips.